Good day and welcome to our webinar for August 2023. We begin as usual in America. The S&P 500 index of the 500 largest companies trading on Wall Street made a new cycle high last week at 4582. That high is just 4.5% off its all-time record high, which was made on the 3rd of January 2022. It seems now inevitable that the record high will be passed, probably later this year. This understanding has forced us to reconsider our position on the S&P 500. On your screen here, I have a long-term chart of the S&P 500 over the past 26 years, which I think can help us to possibly understand the position better. You can see the recent downward trend over here in the top right-hand corner of that chart. And that downtrend has taken the S&P down just 25%. Just enough to be termed a bear trend, to be called a bear trend. A bear trend is normally anything above 20%. If it is a bear trend, it's certainly got to be the shortest and the smallest in history. We believe that it is more likely that this is an exaggerated correction within the great bull trend which began in March 1997 over here. Looking at the chart now, it seems far more likely that this over here is a correction in this long-term bull trend. Obviously, if you look at the chart, you'll see that the COVID-19 spike broke down through the lower channel line. But we regard COVID-19 as an aberration from a technical point of view. So we ignore it, basically, for technical analysis. So we take the lower channel line here from that March 2009 low, which was 676, and we take it through the cycle low that we had last year in October at 3577. That's how we draw that line. And we take it obviously goes right through the middle of this V-bottom COVID-19 aberration. Obviously, you have to realize that the chart on your screen is a semi-log scale. That's important because it means that the relative movements are comparable. So this movement here is comparable to that one. You can compare this downtrend here to this downtrend and that downtrend. Okay, so before this great bull market began in March 2009, there were two bear trends. There was the bear trend associated with the 9/11 attack on the World Trade Center in America. And that bear trend lasted 32 months. Sorry, that bear trend, it lasted 32 months, that's correct. And it took the S&P 500 down 49% from this high to that low. The second bear trend is the one associated with the subprime crisis in 2007-8, and that bear trend was a little shorter. It lasted 21 months, and it took the S&P 500 down 56% from that high there to this low here. The current bear trend is the one you see on your screen on the extreme right-hand side, from that peak there at 4796 to this cycle low here at 3577. And as you can see, it is far smaller than either of the two previous bear trends. It's a 25% fall. And it took place over just 10 months, so it was far shorter as well, less than half of either of the previous two bear trends. So our view is that it is more reasonable to think about this as an exaggerated correction in already existing bull market. We can also justify that from a technical point of view because the upper trend line is well supported, as you can see, the upper channel line here. It's supported by at least 5 different touch points before it reached the high at 4796 on the 3rd of January last year. So in fact, there are 6 touch points on this upper channel line, which means it's very, very solid, very reliable. And the important point about the lower channel line is that if you ignore the COVID-19 aberration, then that channel line is exactly parallel, pretty much exactly parallel to the upper channel line, which gives it quite a lot of validity in our view. So this is an important new perspective for private investors. If what we have been through over the last period is in fact a correction and not a bear trend, then clearly it was a buying opportunity, and it changes the perception that you should have of the market quite considerably. The bull market has now been running for 14 years. And that is very important. It's a long-term bull trend. Obviously, the bull market has been influenced by the massive monetary policy stimulation of the stock market. That monetary policy stimulation took place over 10 years, starting with the subprime crisis, the bear trend in 2008-9, and it ran through and it was extended by COVID-19, and a huge amount of money was created and pumped into the world economy. So, if you're in a primary bull market, you should be fully invested or close to it. And we believe that that is the correct interpretation of this chart. Obviously, you must make whatever interpretation you believe is accurate, but this is our perception. All right, let's look at the American economy itself. The Monetary Policy Committee increased interest rates by a further 25 basis points at its July 2023 meeting. Jerome Powell, who's the governor of the Reserve Bank, commented after the meeting that another hike was possible in November 23, the November meeting later on this year. And he also said, though, that the Monetary Policy Committee regards the current level of interest rates as restrictive, which probably means that they believe that it is impacting the level of inflation. But of course, the level of job creation still shows that the economy is growing. Following Powell's remarks, the latest core CPI showed inflation falling. In fact, June personal consumption expenditure was down to 3% from May's 3.8%. This personal consumption expenditure, or PCE, is the Monetary Policy Committee's preferred indicator of inflation. Most investors now believe that rates have peaked, despite the fact that Powell said that there's a possibility of one more hike. Investors are pricing in about a 20% probability of another 25 basis point hike in the September meeting. And we kind of agree with him. We think it's fairly unlikely that there will be any further hikes in interest rates in America. So it seems like Wall Street is experiencing what is known as a generative AI gold rush. In other words, investors are getting very excited about AI and its impact on the profitability of companies in the S&P 500. The expectation is that AI will push up those profits and that companies will be able to report better results in the future. In our view, AI is definitely a positive factor, and it should impact all companies and individuals positively. But the main factor driving markets is a decade of quantitative easing and low interest rates. The carryover of excessive monetary policy stimulation has combined with the increased productivity of artificial intelligence and other new tech. And together, these things are overcoming the negative of rising interest rates. At least they are doing so far. So, Powell believes that there's a good possibility that America will enjoy a soft landing and that there will not be a recession. Perhaps he is correct. The positive sentiment in Wall Street means that there has been a shift in sentiment worldwide to risk on, from risk off to risk on. And that has reflected in the JSE overall index. So I'll just look at that chart here. Okay, so that's a 1-year chart. You can see here the peak that it made at 80791. That was made on the 27th of January this year. Since then, it has been trending sideways and downwards until the last week. And last week, it broke up through that sideways downwards movement with a bit of an upside break. So at last, the JSE is starting to reflect the general bullishness on Wall Street. It's taken a while, though. Okay, so that's our perception of where Wall Street is at the moment and what's happening with the S&P 500. We've had to change our position, and we now believe that we are in a primary bull trend. And that obviously has got great significance for you as a private investor. All right, let's talk now about what's happening in Europe and, of course, specifically Ukraine. It's now become apparent that Prigozhin is using the Wagner Group to train the Belarusian army. We remain convinced that Putin and Prigozhin made a deal, and that the so-called mutiny was really just a facade. We believe that Prigozhin has been promised that he will replace Lukashenko as the leader of Belarus in due course. He will prepare the Belarusian army to open a northern front against Ukraine when he's ready. This idea does not seem to have gained any hold with Western analysts. They are still saying that the mutiny indicates Putin's growing weakness. But to us, it looks like the mutiny was a typical Putin sleight of hand. We believe that it may have been a stage-managed event to fool NATO and the United States. If we are right, then it has certainly been effective. There are 3 individuals who are basically controlling what happens in Russia at the moment. And they are Putin, Lukashenko, and Prigozhin. Lukashenko, from our observation, is dominated by fear. He's afraid of Putin, and of course he's very concerned about his own failing health. Putin, of course, is also afraid. He's afraid of losing power because he knows that if he loses power, then he probably will not survive. The only one who seems to be unafraid of anything is Prigozhin, and that makes him very dangerous. He's completely unconcerned about his personal safety, apparently. He doesn't care what he says about Putin or the war. He calls it as he sees it. And he's the only one with direct battle experience. He also seems to be very popular in Russia. We believe that Putin knows his potential and is keeping him very close. Looking at the Ukraine counteroffensive, we can see that it's being pursued now with greater force. NATO-equipped and trained elements are being committed, and there's a serious effort to break through the Russian defensive lines. However, they're being slowed down by extensive minefields, but they are making some progress. If they can break through the defensive line, then the progress should speed up. The objective, of course, is to retake Melitopol and to cut the Russians off from Crimea. If the Russians lose Crimea, then we believe it will probably spell the end of Putin. But of course, there is the danger of that northern front opened by the Wagner Group. We also think that the Wagner Group has been conducting exercises on the border or close to the border with Poland in a deliberate effort to delude or to fool the Ukrainians into thinking that they're not interested in the northern front. All right, so that's what we think about Ukraine. In general, the news has been positive. Things are moving slowly, but they are moving in the right direction. All right, let us turn our attention now to South Africa, and specifically to some political developments here. Of course, Ramaphosa faced a huge dilemma with the BRICS conference, but that dilemma has been resolved because Mr. Putin has decided to attend by video link and not in person. It appears he does not trust South Africa not to arrest him, despite what they have said. Arresting him, of course, would have been very tempting and would have resolved our problems with the United States at a stroke. So it was a tempting option. But he's not coming, so that's that. Of course, the African Growth and Opportunity Act is a critical issue here. It's critical for South Africa because we have about 7,000 products that we export duty-free to the United States. Our membership expires in 2025, and there are two main problems here. The first is our relative economic development. We are perceived as a fairly well-developed economy and probably too big to fall within AGOA, the African Growth and Opportunity Act. We always argue that, yes, that is true, but we are the gateway to Africa, so if our economy benefits, then other African countries will benefit too. That argument is starting to wear a little thin, especially in view of our current relationship with Russia, which seems to be far from neutral. We claim it as neutral, but it is argued that we do not really support American interests. If we lose our membership of AGOA, the consequences will be substantial, especially in the motor manufacturing industry. Okay, the next thing I want to talk about is the NHI bill, which passed through the National Assembly thanks to the ANC's majority. It aims to pool all medical funds in South Africa and distribute medical facilities evenly across the population. Obviously, it would be very good and ideal if everyone in South Africa could get first world medical treatment. However, the problem is that South Africa simply cannot afford it. The NHI will restrict medical aids to providing only gap cover. Many doctors, we believe, will leave South Africa if the NHI is implemented. The ANC appears to us to be completely incapable of running any large organization. They have proved that time and again over the past 29 years. Transnet, Eskom, SAA, the Post Office, Denel, SABC, and many others. The most recent white elephant is the impending government implementation of ARTO, the Administrative Adjudication of Road Traffic Offences Act, ARTO as it's known. That plans to move South Africa onto a system of points for traffic offences. So if you commit a traffic violation, then your number of points will be reduced, and if it goes down far enough, your license will be suspended, or you could even lose it. It's a system which has been applied in countries like Australia and other first world countries quite successfully. The problem is that ARTO, this system, depends on the maintenance of meticulous records, and record keeping is not this government's strong point. Just consider the e-NATIS system, which records vehicle ownership. About half of the people on South African roads who are driving on the roads do not have a valid license, have not passed a driver's test. Thousands of licenses have been bought without a driver's test. Right now, only about 4% of traffic fines in South Africa are actually paid. The rest of them disappear somewhere. In our view, the NHI and ARTO will simply turn into further corrupt government systems. But perhaps the most damning indictment of the ANC's mismanagement and corruption is the sharp rise in the number of children under the age of 5 suffering from severe acute malnutrition. The ratio was about 1.9 out of 1,000 dying of severe acute malnutrition in 2019, and that has now risen from 1.9 in 2019 to 2.4 per 1,000 in 2023. And of course, the figures do not show the many who die without being reported, or the others that die from other diseases like dysentery and pneumonia because their system is badly weakened by malnutrition. In our view, that is perhaps the most severe indictment of the current administration. They cannot feed their people. That's really what it boils down to. A speech recently given by Nkosazana Dlamini-Zuma, who is a minister of the presidency, shows her radical populist stance. She calls for a state-owned bank. She says the big 5 banks that currently operate in South Africa are working against the interests of most South Africans. Clearly, she is anti-capitalist. She says the BRICS countries will become a new world order that will replace the current international financial system and will replace the US dollar as the international currency. Her extreme views are bad for South Africa and the share market, and they cause a flight of capital from South Africa, and they endanger our membership of the African Growth and Opportunity Act. Finally, I'd just like to say the re-imprisonment of Jacob Zuma is now in the hands of prison services. For some reason, Zuma is currently in Russia getting medical treatment. If he is rearrested on his return, it could spark more rioting and looting like we had in July last year. At that time, 300 people died in that rioting, and about 50 billion rands worth of damage was done. Hopefully, if he is going to be rearrested, the police will be a little better prepared this time. Okay, let's turn our attention to the economy. The International Monetary Fund increased its estimate of growth in South Africa in 2023 to 0.3%, slightly up on their previous estimate, and then they reduced their estimate for growth next year to 1.7%. This compares with the Reserve Bank's estimate of 0.4% growth for this year. And also the IMF estimates that growth in sub-Saharan Africa will be 3.5%, and that the world economy will grow by 3%. So we are way, way behind those figures. The Monetary Policy Committee in South Africa, the Monetary Policy Committee in America left the repo rate unchanged at the Monetary Policy Committee in South Africa left the repo rate unchanged at 8.25%. This follows the surprising drop in June's inflation to 5.4% from 6.3%. The Monetary Policy Committee, however, kept its hawkish stance, saying that further rate hikes were possible. Of course, the objective is to bring the consumer price index back to the midpoint of the target range, somewhere around 4.5%. An estimate of inflation for this year is 6%. Gross domestic product growth is estimated at 0.4%, as we said earlier. Letsetja Kanyago, who's the governor of the Reserve Bank, says inflation is gradually coming under control. We believe that the rate hiking cycle may well be over, however, and there has been a slight improvement in load shedding, but we doubt that it can be sustained. Global demand for our mineral exports has declined. Mining production fell by 0.8% in the year to the end of May. This is due to a combination of load shedding and, of course, lower commodity prices worldwide. The effect, of course, will be to reduce tax revenue by roughly 60 billion rand in the 2023 year. Rhodium prices fell by an amazing 65%, and palladium was down by 28%. Of course, Transnet's bad performance has been a major factor. For example, it impacted on Kumba's figures for the 6 months to the 30th of June 2023. Kumba decided to suspend 2 billion rands worth of capital projects because of the Transnet problem. The Purchasing Managers Index suggests that business conditions in 6 months' time will be very depressed. The producer price inflation rate dropped sharply to 4.8% in June compared to May's 7.3%. This shows that prices at the factory gate are falling, probably mainly due to lower demand. Load shedding is pushing up producers' costs, and of course that will impact on the CPI, the Consumer Price Index, in due course. Retail sales fell by 1.4% in May, which makes it the 6th monthly fall in a row. That shows the poor state of the South African economy, mainly due to increased load shedding and rising interest rates. The South African economy is basically contracting steadily. There are some bright spots, though. Vehicle sales in June were up 14% on the previous year. This is surprising, given the impact of load shedding and rising interest rates. Vehicle sales are expected to improve further in the second half. However, exports were down by 12.6% from last year. Year to date, vehicle sales are up 4.7%. Manufacturing activity increased by 2.5% in the year to May 2023, on top of April's 3.6% increase. This shows that manufacturers have implemented their own power arrangements. The largest gainer in manufacturing was motor vehicles, parts and accessories, and that was followed by iron and steel products. This is encouraging because South Africa is moving away from Eskom. But over the long term, manufacturing has been shrinking. For example, it contributed about 12% of GDP in the 1980s. Contributed 22% of GDP in the 1980s, and it's now contributing about 11% of GDP in the first quarter of 2023. One of the major concerns at the moment is the attacks on trucking on our major highways. This may turn into a major problem for the economy. There have been 16 attacks on the N3, and it's now spreading to the N4. So that's a problem. Clearly, this is being conducted by organized crime syndicates. Transport companies are responding with increased security, but the effect will obviously be to increase the prices of transported goods. Okay, let's look at the rand now quickly. Just pick that up on the chart here. Okay, as we know, Wall Street is in a bull trend now. There's been a sharp shift to risk on from risk off, and that means that quite a lot of money is searching for returns, and that has increased the strength of the rand. This strength is not because of the South African economy, it is despite it. Late last year, load shedding caused the rand to weaken, as you can see on the chart here, late last year. And then suddenly, it reached a peak, a worst level of 19.76, and then started to strengthen. As you can see, it's still in that strengthening pattern, although the figures from yesterday were quite scary. Suddenly dropped to 18.23 there. In our view, there's a strong relationship between the S&P 500 and the rand. When the S&P is strengthening, there's a shift to risk on, and then investors start looking for higher yields, which they can get from emerging markets, and that's always good for the rand. Okay, let's look at a few commodities. I want to start with the oil price because that's also changed quite radically since the last confidential report. Let's put a bit more data on the screen here. There you can see the price of North Sea Brent oil. You can see the impact when the Ukraine war started in March 2022. And then there's Biden's visit to Saudi Arabia. And from that time, there's been a strong downward trend in the price of Brent oil until just the other day. So we've now got a new upward trend. There's an upside breakout through that trend line. And this looks like oil might be on the way up again. It closed last night at $85.51 a barrel for North Sea Brent oil. Obviously, this is due to the improved perception of the U.S. economy, the American economy, and hence the economy of the world. So that's definitely a consideration if you are looking at these markets. Rising oil price, of course, is bad for inflation worldwide, but it looks like the Fed is now on top of inflation in America, so that may not be a big factor. Luckily for South Africa, as the oil price is rising, so the rand has been strengthening, and they have offset each other as far as our petrol price is concerned. Okay, let's look at the gold price. Gold is clearly an important issue, not so much because South Africa produces a lot of gold, it doesn't anymore, but just because it's a good indicator of what's going on in the world. All right. So here you can see the dollar price of gold, and you can see that resistance level at 2050, which we've drawn in before. But now what I want to do is to look at the gold price in rands. Wait. Getting this wrong here. The gold price in rands coming up. There it is. Okay, and I want to put a lot of data on the screen here, 10 years, all of it. Okay, that's all the data that I've got on the rand price of gold. And what you can see here is, once again, we've got a very well-established upward channel in the rand price of gold, with the upper and lower channel lines both supported by many different touch points over the years. So here we are, we're right up here now. And you can see that the gold price has been rising steadily in rands over that lengthy period of time. So, of course, our gold mines receive rands for their gold, not dollars. So when the rand weakens, they are protected to quite a large extent. It improves their profitability. We believe that the gold price in rands will continue to perform well. And of course, if you should have a few Krugerrands stashed away, that will make a big difference to your life. I remember when I bought my first Krugerrands a long time ago, probably around 1970, somewhere around there, 75. I think I paid less than $500 a coin. Today they're trading for over 30,000 Rand a coin. Okay, let's look at some companies now. Since the last confidential report, we have been looking at a big problem which private investors have, which is their ability to select the right shares from the 300-odd shares which are listed on the Johannesburg Stock Exchange. So share selection is always time-consuming and difficult. So to help with this, we've developed a new thing called the Winning Shares List, which is available to clients both on the website, the PDSnet website, and also in the data center, the PDSnet data center. The Winning Shares List we started about just over a month ago, and it's designed to help investors with this problem of share selection. The shares on the Winning Shares List are chosen by the staff of PDSnet. They're not necessarily blue chip shares, but many of them are. Historically, about 70% of these shares will go up after they've been added to the winning shares list. And all of them have sufficient volume for at least a 10,000 Rand investment. As of Friday last week, there were 21 shares on the winning shares list. 17 had already gone up and 4 had gone down. The best of these shares had gone up by 19.3%, and the worst was down 4.98%. Of course, no one is ever 100% successful with share selection, but we are assuming that you have a stop-loss strategy. You should in fact make it an absolute rule never to lose more than 15% on any investment in the share market ever, and that 15% should include your dealing costs, which will be around 3%. If your winners can do 100%, 200%, 300% or more, but you cut your losses on your losers at 15%, then you must be successful. As I said, the winning shares list available to clients of PDSnet on the website and also on the data center. The following shares have been chosen from the winning shares list. So these have been chosen over the last month or so, and some of them have done quite well. The first one I want to look at is Astoria. Okay. This is an investment holding company which owns shares in Afrimat, Transex, OIT, and other interesting shares. And what's interesting about this company, and has been interesting for some time, is that it is trading for well below its net asset value. The net asset value, 1,340 cents, and as you can see, the share price is just over 1,000. This made it a potential target for a takeover. So when it issued a cautionary on the 14th of July, just the other day, a couple of weeks ago, and it said it was negotiating a potential acquisition, we decided to investigate further, and in due course on the 18th of July, we added to the winning shares list. Over here, as you can see, it was then 1,000 cents per share. It's now gone up to, well, last night it came off a little bit, but it's up at 1,069. So it's gone up very nicely altogether. The second share from the winning shares list is Truworths. Of course, everybody knows about Truworths. They're an iconic blue chip South African clothing company. They're an institutional favorite. They have stores in South Africa, UK, Ireland, and Germany, and that makes them something of a rand hedge. In their results for the 26 weeks to the 1st of January 2023, they had turnover up 13.7%, sorry. So this is an exceptionally well-run company. Anyway, we added it to the winning shares list here on the 27th at 68.93. It's since gone up quite nicely. It closed last night at, let me just get that. It closed last night at 69.84. So it's gone up a bit. The third share that I want to draw your attention to from the list is Sanlam. Again, this is a very favorite share of mine. We added it to the winning shares list on the, well, we've been punting this share for years, but we added it to the winning shares list on the 12th of July over here at 61.19. It's now trading for about 65.91, so it's done very well. This is what we call a diagonal share. Over the long term, it goes from the left-hand corner of your screen to the right-hand corner. Let's see if we can do that. We'll put all the data on the screen, and there you can kind of see. It generally goes up. It's off a little bit, but we believe it will continue to perform very well. So there's Sanlam. Then PSG Consult. This is the fourth share that I wanted to show you from the winning shares list. We like this share. It was added to the winning shares list over here on the 14th of July at 13.62. It since went up to 1,436 cents last night. So it's doing well. This company is a financial services company involved in insurance, healthcare, estate planning, and a variety of other things. It's a high-quality blue-chip share. It was spun out of PSG and unbundled in March 2022, and it's in a strong upward trend, so it's a good share to have on your portfolio. These shares are a sample from the winning shares list, all added for different reasons, but mostly because they have good prospects. They will remain on the list unless they fall below their stop loss levels. Some, of course, are special situations, like Astoria. Others are blue chip shares. Okay, folks, that's what I've got for you today. I hope that you enjoyed it and got something of value out of it. We will be doing our next confidential report on the first Wednesday of September, so make sure to diarize that. Thank you for your time.